Welcome to a special series called The Global Crisis Monitor, featured on the Treasury Update podcast. Thank you for joining. Each week, the Treasury Coalition, a group of Treasury-oriented firms which you can find on treasurycoalition.com, promotes a global survey covering critical issues and responses whenever a significant disruption is underway. This podcast shares key information from the surveys and analysis of the broader market to support the profession in optimizing current response and future preparation. The weekly surveys run from Wednesday through Tuesday, and results are shared each week via a podcast and digital report. Sign up on treasurycoalition.com and take the 5-minute survey each week. We appreciate your participation and teamwork. On this episode of the podcast, special host Meredith Zonsius meets virtually with Managing Partner Craig Jeffery of Strategic Treasurer to discuss the first wave of survey results from the weekly COVID-19 Impact and Response Survey. They uncover significant insights on major factors impacting Treasury and finance groups amid this pandemic. Topics of discussion include the view on organizational and country-level responses and performance during this crisis, the level of concern across various dimensions including liquidity, family, and counterparties. Listen in to learn about this week's results so that together we can monitor the situation and best support our Treasury and finance community. Welcome to the show, Craig.
Thanks, Meredith.
Can you briefly provide an update on the Treasury Coalition and what it aims to accomplish?
Sure, Meredith. The Treasury Coalition was formed just recently, put together with over 10 organizations, Treasury organizations, and the design is to monitor the key vitals or measurements of attitudes, the situation that's unfolding, and responses of organizations, banks, and governments against a number of different dimensions, from how employees are cared for, customer status, liquidity, and responses to the situation. We just want to make sure we had an ability to track both positive and negative movements in both results, attitudes, and share good ideas that people have as we work through this together.
We are measuring viewpoints from a week-to-week basis. I'd like you to share some of the highlights specifically about organizational impacts and responses, country-level response, level of concern with local communities and families this week. We can start with impacts and responses from the organization.
Yeah, we did look at all those different areas. So let's take the negative stuff first and then go to the positive. So on the company side, what was the expected impact? How has that changed over the past week of COVID-19 to my company? That was negative, and so we do a 1 to 9 scale. So this was about 4.4, so it's negative, a little bit negative. On the community and family, what was the impact on the community and my family in the past week? And that was negative, not quite as negative. It was only 0.35 down, so it's about 3 to 5. 3 positive versus 5 negative in terms of how that would look. If you look at some of the positive things, the headquarter country action response, the impact to us, the country level response was very positive. That was 1.5, so very much good movement there. And then on the action and response of my company, that was the most positive. That was 1.8. So company action was certainly catching the attention of finance and making a difference. Perhaps people are getting more serious, but so some negative and some positive items there, Meredith.
Excellent. Let's get into timing. You built the survey to capture respondents' view on time. How long will it take for us to be in the clear, do you think? In regards to inflection, the pinpoint of that, the end of the health crisis, restoration financially. What are your thoughts on that?
Like you said, inflection point, when will the health issue start to subside? When will it turn from rising to going negative? The majority felt the inflection point would be reached within a month. Quite a substantial minority felt it was 2 to 3 months. Then we had people going all the way out to more than a year. And so it rolls out past a month in terms of the inflection point as expectation. In terms of the end of health issue, that extends quite a bit more. Very few people thought it would resolve within a month. And so it averages towards the 4-month side of the 4 to 6 month spread as you look at the whole range that people responded to. So the mean was somewhere, I would say, probably between 4 and 5 months in terms of what the expectation was on whole. In terms of returning to financial normalcy, it was closer towards the 6-month range. So much longer to return to the financial equilibrium where we were before the crisis, but you can see that stretching out.
Liquidity is a big talking point with central banks and economists. What are the thoughts on liquidity these days?
Not surprising, Meredith. People are negative about liquidity. How negative? I think you might find a little bit of surprise there, but I think there's some nuance too from the responses. First, about 80% of organizations were negative. It was more than 4 times the level were negative versus were positive at that point. So it's deteriorated over the past week. If we look at the bank line of credit, commercial paper issuance's ability to raise funds, CP issuance, was 2 times more negative than positive given the view over the last week. Bank line, revolvers, more concerned, definitely negative 1.3. Covenant requirements, material adverse conditions, that was almost 2 times negative as well, so just under commercial paper issuance. The biggest negative was accounts receivable, more concerned about accounts receivable. That was more than 5 times were more negative, more concerned rather than less concerned since the past week. The one bright spot on liquidity in this past week is that the central bank liquidity that they've injected into the banking system to the banks to make sure that there's no freeze of the debt markets and the flow of liquidity was positive. 2.5 times more were less concerned than more concerned over the prior week. So that's a significant bright spot about central banks like the Fed's action.
Excellent. We need good news.
Yes, and that action really helped. That's a good role for central banks to provide, and that came at a good time.
Any learning points from the respondents to share, things that are interesting or noteworthy?
Yeah, and the report has some more information in it. There's certainly a lot of responses, but a couple of things we heard when people said, what are you doing that's helping your department, your organization? Scenario modeling and financial communication, talking with your bankers, running different scenarios to get a jump on what your cash flow may look like, how this could impact customers, trading partners, etc. That was pretty good. Second, remote but communicating is a headline there. People found that more frequent communication, check-in calls really helped as everyone had moved home. And so we saw lots of comments about, hey, let people take multiple screens home so you can be productive, make it a more work-like environment. There's a couple other items. Preparation mattered. It just seemed like the organizations that had been running their tests, several times a year, having a real backup plan that they tested was making a really big difference. Those companies were adapting much better in the first couple of weeks than those who started responding, saying, where are my laptops? How do I get connected? My VPN doesn't have the capacity I thought it did, those types of things. So a couple items there. There's some more as well in terms of changes in what they're doing with investments, what they're doing with their lines of credit. Some good information there that's worth reading the report for.
Perfect. The survey can be taken each week, correct, between Wednesday and Tuesday?
We're running this every week, so take it from Wednesday to Tuesday each week, and it'll run. We'll have a report, we'll have a podcast, and we'll all be tracking to see what we're learning and what the attitudes are and how they're changing.
Great. Thank you for the update, Craig.
Thanks, Meredith.
This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.